everyone. Welcome all to Affiliate World. So we're going to talk about taxes today, so how we can, sort of like optimize on business as well as personal taxes. So just a very brief intro about myself and the firm. So I'm the CEO and founder of Digitas Finance. We are the only tax consultancy firm in the world exclusively serving global digital marketers. We've saved over more than about $25 million worth of taxes for our clients. Most of our clients belong to 5 of the top 10 affiliate marketers on this Affiliate World Forum. This Affiliate World Conference itself, this is one of our clients as well, and we've been serving them for quite some time now, saving a lot in taxes. We've got players, we serve players in e-commerce, dropshipping, lead gen, creator, influencers, and also in crypto space as well. We've got clients from Europe, Asia, Middle East, and many more. So, that's just a simple question. Would you like to zero your taxes? I'm sure the answer would be yes. So we can definitely help you optimize on the business taxes. So when it comes to the business taxes, we can definitely help you in bringing them down to pretty much 0%. And in some cases, we can definitely help you to optimize on the personal taxes as well. You can't just bring the personal taxes down to absolute 0% unless, in certain situations. But with these setups that we have developed, you can still reduce it down to pretty much quite a bit of it. In terms of the solutions that we have, so we have solutions for each and every stage of your journey. So it's not like the solutions that we have, they are just for super affiliates or so. We do have for those as well. But if you're in the startup stage, if you're in your mid-size of your journey, or if you're in a pretty high qualified stage, we do have tax optimized solutions for each and every stage. So we're just gonna look at a few case studies. So these are all the real-time case studies from our client. So how we help them with our solutions, what taxes they were paying before, and then how we sort of help them save on those taxes. So, of course, the picture is not real, but yeah, so this is one of our clients. So it's Tom. He was a beginner e-com marketer earning about $57K a month. So these were the current facts, before he came to us as a client. So these were the facts. 23 years old, a young entrepreneur, an Irish national, running currently, he was running a business through the company set up in the UK itself, and running on almost about 50% operating margin, and paying taxes in the UK. So business taxes and the personal taxes in the UK itself. So this was the current scenario before onboarding with us. Almost he was making about $700K worth of revenue. After paying for the VAT, it's about 550K, then operating margin 275K. So the take-home profits were about 206K. So there's a pretty much 70% dip, starting from 700K, and all the way up to 200K. So this was what our solution, what we recommended to him. So it was like a limited liability company set up in Gibraltar and Hong Kong. I think I'll talk about why we select Gibraltar and Hong Kong further down the slide as well, but it was a company set up based either in Gibraltar or Hong Kong. Both of these two jurisdictions, they are white label, and they have this tax policy, where, for example, if all of your income is outside these two countries, then you can pretty much get zero tax, on the profit. So regardless of whatever your profit levels are, you actually end up paying 0% corporation tax on that. So the second thing was, in these two jurisdictions, you can get access to the worldwide payment processors like Stripe, PayPal, Shopify, and this is one of the important things for the e-com players. Setting up a company in a jurisdiction where you pay zero tax is important, but then at the same time, you also need to have access to the right payment processors, because otherwise, if you don't get access to the right payment processors, you can't really operate in that. So this was one of the advantages of both Gibraltar and the Hong Kong itself. Again, you get multi-currency payouts, so you can take money in dollars, euros, charge money in dollars, euros, GBP, and get the payouts in the same as well. When it comes to the VAT, so in some cases you can actually optimize on the VAT as well. It kind of depends, because VAT is more like a consumption tax. So in some cases you can optimize on the VAT through these setups, but in some cases you cannot, but you would still be able to save quite a bit on the corporation tax itself. So that's how it was. After the solution, if you are able to save on both the corporate tax and the VAT, so you can pretty much see there was a pretty massive saving of about 140K. If you were able to just optimize on the corporation tax, but not on the VAT, it's still a pretty decent saving of about 70K from that. And so this was just on the beginner stage. So you can see I'll just show you next down the slides, but if you are making much more in terms of revenue. So you will actually end up seeing that the savings that you get from these sort of like tax optimized structures and solutions, they are pretty high. So this is another example, like where an intermediate dropshipper making around 120K a month. Again, with the same solution, Gibraltar or Hong Kong. So you can see with the tax optimized scenario, with a fully tax optimized scenario, still able to save 300K. Let's say if you're not able to optimize on the VAT, but you're still able to optimize on the corporation tax, so you can still save around 150K. Now, this is an advanced e-commerce marketer, making a pretty decent like 260K a month, and you can see the impact here. So if you, again, with the same solution, which is Gibraltar and the Hong Kong itself, so the take-home profits, if you're able to optimize both on the VAT and corporation tax, is about 600K uplift, from the current scenario. Whereas if you're just able to optimize just on the VAT itself, it's still a pretty decent like uplift of about 300K on that. Now, you must be thinking like, is this structure just for the e-com players, or could it be used otherwise as well? So yes, this structure is not just for the e-com players. You could actually use it otherwise as well. So this is an example of an affiliate marketer who was earning around 132K a month. So these were the facts before coming to us. So he was running an ad-based agency in the UK, having clients in the UK and overseas both. And he was currently running the business via the company setup in the UK itself. And of course, paying taxes in the UK as well. So this was the current situation, like gross revenue of about 1.6 million, 20% VAT, so you end up at 1.2. Then after all the expenses and so, it's about 765K. And then the take-home profits are like 570K or so. So with our solution, again, you can do it in Gibraltar or Hong Kong. I think one good point about these solutions is that the bank account options that you get in these solutions, so you could actually get like local bank account options as well. Like for example, you could actually get a bank account in the UK under these setups. You can get a bank account in the Europe. You can get a bank account in the US. So let's say if you have a client in the UK who wants to pay to your Hong Kong company or Gibraltar company, they can actually pay into a UK-based bank account, so they don't have to worry about the fees or international wires or anything like that. So it was a multi-currency bank account. Now on the VAT side, because these companies are outside the UK, the clients were all outside the UK as well. So even if you have client inside the UK, you would still be able to avoid charging the VAT, because this is going to be more like export of services, so you don't charge 20% VAT on that in this case. So again, no VAT and no corporation tax in this case. So this is what the result was like. In this, there was almost about 40% or up to like 400K uplift in terms of the take-home profits in this case, after having this, the tax optimized scenario. Now, this is just a quick comparison between Gibraltar and Hong Kong, like which jurisdiction you would choose, or why would you choose one over the another. So both of them, they are both like have a zero corporation tax model, as long as you're not operating in these two countries itself. So it's like fully zero tax. Low setup costs, again on both sides. They can all be set up fully remotely, together with the bank accounts as well. They can all be set up fully remotely. You don't have to travel to either Hong Kong or Gibraltar for that. In terms of the information, so with Gibraltar, of course, the information is available on the public portal. So like the UBOs, the directors will be available on the public portal. Whereas in the Hong Kong, it's almost confidential. There is a very little information that is available on the public portal, but other than that, it's an absolute confidentiality of information. Again, in both setups, you get access to the worldwide payment processors like Shopify, Stripe, PayPal, so you get access to all of them. I think one key difference between Hong Kong and Gibraltar here, which is more relevant to the e-commerce, is the payout options. So in Hong Kong, the payout options is either dollar or Hong Kong dollar. So if you're charging clients in the US, you charge them in the US dollar. You actually get payouts in the US dollar into your bank account as well. Whereas in Gibraltar, the Stripe, it will actually give you access to the multi-currency payout options. Like you can actually charge them in the euro, and the payout into your bank account would actually go into euro as well. So this is one of the difference there. Then the other one, there's no local proof of address required to open the bank accounts. So payment processors like Shopify or so. This is one of the things like with the US LLC, or if you're opening companies in other jurisdictions, Shopify or these other payment processors will ask you for a lot of substance in these countries, like either some sort of like an office space or these sort of things. Whereas with the Gibraltar and Hong Kong, there is no such requirement for that. quite low administrative costs for Gibraltar. You just have to file like annual accounts and tax, no audits or anything is required. Whereas for Hong Kong, it's slightly higher, not that high, but it's slightly higher. You do have to file audited accounts like every year for that. So now, I think one of the question here is that does this solution works for everyone? So the answer is no, it doesn't really work for everyone. So it works perfectly well if you are a digital nomad. So let's say you don't live in a particular country for a certain amount, like you don't become a tax resident of a particular country. The solution works out very well. If you're in a startup phase, like in most of the countries, like UK and Europe, there is a control foreign company tax rule. So which is like if you are fully managing the companies from the country where you are based or from the country where you're residing, so they do try to tax Hong Kong or Gibraltar in these two in the country of tax residency itself. So, but there are like certain exemptions. So normally it's about $500,000 or euros. So if your profits are below than that level, you are exempted from the CFC. The other point is if you are a tax resident of a country, with territorial tax system, so countries, which will only tax you if you have earned any income from these particular country. Like let's say, for example, Singapore. If you're living in Singapore, so Singapore will only tax you on your Singapore source income. So earning dividends or salaries out of these companies will not be taxable in Singapore, and they will not tax the foreign income is tax free. So this solution kind of works very well for that. I think just so. What are the potential risks associated with this structure? So again, it's not recommended if you're not a digital nomad, if you're earning like a pretty high level of profit. So like above the CFC threshold, it's not recommended. And if you live in a country where they actually tax you on the worldwide income, again, this solution is not recommended for that. The major reason for this is because there is a lack of substance in this solution. So these are just like shell companies in the air, without having any substance, like you don't have any physical offices, you don't have any employees or anything in these particular countries. So now I think one of the questions is, okay, so what's the solution? So one thing that might just come up to your mind is, okay, well, if they lack the substance, then let's just create the substance by having offices or employees in Gibraltar or in Hong Kong. The answer is no. I mean, if you create substance in Gibraltar or if you create substance in Hong Kong, you lose the tax benefit in Gibraltar and Hong Kong, then there no longer remains zero tax. There is almost like 16% corporation tax in Hong Kong, and there is a pretty decent tax, in Gibraltar as well, depending upon on the profit level. So this is one of the solutions that you could use, if you don't fit into those categories which we discussed above. So this is kind of like a mini, a holding subsidiary kind of a structure. So you have like a Dubai company. So I'll talk about like why Dubai company, but so you have like a UAE company at the top and like a holding company. So you guys own the UAE company itself. Underneath that, you have a Hong Kong company, so which is a Hong Kong or Gibraltar company, so which is like a main trading company. Now, with the UAE company itself, you do get resident permit, so the directors or the shareholders do get resident permit. You can live in the UAE as well, and you will be able to get like personal tax advantage. I'll come to that in a bit. But if you don't live in the UAE, you would still be able to visit UAE once every 6 months. So it is adding substance out over there. The second thing is, in the free zone itself, there's like a special tax relief for the UAE companies, where you can actually have like more, so the UAE companies could serve more as an head office, so you can have like, the UAE companies does come with an office space anyways, but you can have like more offices or employees, and it will create a substance in the structure, but will not get Hong Kong or Gibraltar tax in the UAE. So, so again, the UAE serve as a holding company, and the Hong Kong and the Gibraltar, will just serve as a main operating company. You do all the business through the Hong Kong company or the Gibraltar company, avail the offshore tax relief. You don't pay any corporation taxes at that level, and then all the dividends out from the Hong Kong or Gibraltar will go up the chain to the UAE company. And you do not pay any 9% corporation tax on the dividend income in the UAE company as well. Now, this is one of the advantages of the free zone tax relief in the UAE. Otherwise, UAE companies are taxable at 9%. So, but there is a special tax relief in this case if you're serving it as a head office business, or or if it's more like a dividend income, they are fully tax free. So you don't pay any corporation tax at the Hong Kong level. You don't pay any corporation tax at the at the UAE level. So this is like a like a very tax optimized solution created with the proper substance behind it. I mean, it's it's a very simple solution. So that's how it looks like. It doesn't look like very scary kind of a group structure, or you don't need to be like making like a pretty high, worth of like profits in order to be, in order to in order to establish this sort of a structure. So the cost and everything is relatively cheap. So, you guys own the company, and then underneath that, there is a Hong Kong and Gibraltar company. So, so that was pretty much it about the business taxes. Now, I think the other area is about the personal taxes. So now, in all the structures that we have discussed so far, so of course, up to the point you get the money, into, as long as the money leaves, stays in the company, it's all tax-free. There's no taxes that you're paying. But the moment you withdraw money out into your personal account, and let's assume you guys are not a digital nomad, or you're not living in a country where, where they just tax you on the worldwide income, then you would end up paying personal taxes when you take dividends or salaries out of these companies. So how you can optimize on the personal taxes? I mean, one solution here is that, of course, with the UAE company, it comes with an option for you guys to take a UAE residency permit. So you can take the resident permit, you can move to the UAE, so you can live in the UAE as well. So you can, in order to qualify for the UAE resident permit, you have to live there for like 6 months or so. So it's a UAE tax residency. So the residency permit, you can get it anyways, but in order to qualify for being a UAE tax resident, you need to live there for 6 months or more. So let's assume you live in the UAE for more than 6 months or so in a tax year, you become a UAE tax resident. In that case, if you withdraw any salaries or dividends out of the company profit, they will be subject to 0% personal taxes. Now, another thing here is, if you're a digital nomad, again, this setup would work as well. You don't have to live in the UAE for that long, like for 6 months or so, but your principal home could actually be in the UAE, and you would still be able to avail a UAE tax, like a personal tax residency benefit. So any profits that you withdraw out of the company as a salaries or dividends will be subject to zero personal taxes. So yeah, in this case, you pay 0% corporate tax and you pay 0% personal tax. Now, this is a question which I normally get from most of my clients, that can I live in Europe and still pay 0 personal taxes? So there are like a few solutions, not always, but there are like a few solutions. So one is this, a relatively recent, this Irish non-domicile residency program. So you could actually opt for this Irish non-domicile residency program. You can actually move to Ireland. You can live in Ireland. Again, your source of income has to be outside the island, so you can work with the same structure, Dubai plus Gibraltar or Hong Kong setup. So you can work with that. The company has to be outside the island. You can open, of course, you will have a UAE holding company, so you'll get like a UAE resident permit. You can open a UAE personal account as well. In this setup, as far as the business taxes are concerned, they are 0 tax anyways, because it's fully tax optimized scenario. So you don't pay any corporate tax. When it comes to the personal tax, so as long as the money stays outside the island, so like you can put it into your personal account in the UAE, it stays outside the island, it is not taxable in Ireland. So the only money that is remitted into Ireland will be taxable. Now there's another misconception here with the with the people that, okay, if I'm living in UK, I have a company in UAE, fine, I'll withdraw the money into my UAE personal account, not into my UK personal account, but that means I'm still tax-free. That is an absolutely wrong thing. If you are a UK tax resident, your worldwide income is taxable, regardless of whether the money stays in a UAE personal account or wherever, but it is fully taxable. Whereas in Irish non-domicile case, it's opposite. So as long as the money stays outside the island in your personal bank account, it is fully tax-free. So yeah, in this case, you pay 0 corporate tax. You only pay personal tax if you've remitted some income in Ireland, or if you have earned any Irish, source income. So that's another one. Beckham law, I don't know, most of you might have heard about it. So it's a very famous in Spain. So again, the corporate setup remains the same. It's like a Spanish digital nomad visa, which you can opt for. Again, the main company has to be outside the Spain. Now, the plus point with this is you will be able to open a personal account in Spain, and you will be able to open the personal account in the UAE as well. In this case, the corporation tax remains 0, and when it comes to the personal tax, even if you remit the money to Spain, so let's say you've taken dividends out of the company, you can leave it in the UAE personal account, or you can even bring that into Spain as well. It is fully tax-free. So there is no personal taxes in this case on your personal income. The only downside for this is I mean, not a downside, but this scheme is like limited for 6 years. So you can only avail this advantage for first 6 years, when you've moved to Spain, and then after that, you will be taxable on the normal basis for that. So yeah, so in this case, again, you pay zero corporate tax. Personal taxes, again, if you are earning any Spanish source income, so not the money that you're remitting out of this setup into Spain, but let's say if you're earning any other Spanish source income, it will be taxable. Other than that, it will be fully tax-free. So this is the last one. So for it's a Gibraltar solution. It's like a Gibraltar Cat 2 solution. Now this is for high net worth individuals. So you need to prove that you have a net worth of about £2 million. Showing your worldwide assets, and so you have to purchase like a property. It's like it could be a rental, or it could be like a purchase as well, of a property in Gibraltar. It has to be a qualifying property. So you buy that, and again, the main company in this case has to be outside the Gibraltar. So you can use the same Dubai plus Hong Kong in this case, not Dubai plus Gibraltar. So you can use Dubai plus Hong Kong setup in this case. No corporation tax. You don't pay any corporation tax. This setup is fully tax-free. When it comes to the personal tax, it's quite excited for the high net worth individuals, because when it comes to the personal tax, so you have to pay a minimum tax of £37,000, but it's fully capped at 44,000. So the maximum that you pay is like 44,000, and you don't pay anything above than that. So for the high net worth individuals, I'm sure they'll probably end up paying a lot more in the personal taxes. So if it's capped at 44K, it's a pretty decent win-win situation for them. So yeah, in this case, you pay zero corporate tax, but you do pay some amount of personal taxes, which is either 37K or 44K, depending upon your situation. So just in terms of finally, before I close off, so just in terms of like our services, so we are kind of like a one-stop solution. So we do everything starting from tax advisory itself, setting up the companies, bank accounts, payment processors, resident permits, and then looking after all the ongoing accounting, compliance, auditing services, in all these structures. We're not just like UAE, but we are based primarily in the UAE, but we look after everything. So we have, again, all of these solutions, we have like fully customized, like tailor-made solutions for each of your needs. So it kind of depends on each and every situation. So we have different solutions for different things. Again, an extensive presence across Europe, Middle East, Asia. We have teams in Dublin, London, Dubai, and Hong Kong. So we do have offices across the board. All of our staff members, they're like qualified chartered accountants coming with 15 years plus worth of experience, serving in the digital marketing industry itself. That's my email address. It's our website as well. We have a booth out there as well, B50, in case if you guys want to, drop by and discuss your situation. But that's WhatsApp and Telegram as well. So yeah, I think that's pretty much it from my side. Yeah.